Sure, there are individual movers, but the action on the mid caps and small caps, Tamanna, for lack of a better word, sluggish.
Absolutely. There are just pockets of excitement, Niraj, frankly, and it's all news-driven. So if you look at the top gainers as well on the NSE 500, you'll see Gujarat Gas there completely flying all day. So Gujarat Gas is the top winner over there. But, you know, if you pull up, for example, a GSPL and see what's happening there, GSPL also doing okay, but, you know, nothing to match what's happening with Gujarat Gas. Yeah, GSPL about 3.5% up, Gujarat Gas, they're 10.5% up. Adani stocks are buzzing today, Adani Power, Wilmer, Adani Green, all of them for various news reasons as well. There are orders, there are business updates. I want to pull up ports also and see what's happening there, whether this is something you're seeing across that group, and of course standard disclosures there. We talked about Bajaj Finserv and Bajaj Finance, but look at Bajaj Holding as well. Not very clear if they will be a beneficiary of the Bajaj Housing Finance IPO, but Bajaj Holding is what I'm talking about. Also doing fairly well today. You know, yeah, there's Bajaj Holding. Another story which is interesting is, and we've been speaking so much about auto, but look at Auto Ank. Look at a Sona BLW. Let's pull up a Uno Minda as well. Some of these counters also doing fairly okay in today's trade. Uno Minda, not so much. On the losing side, the whole, I would say, telecom pack looking a little, you know, hit. Indus Tower, Vodafone, both losing steam today. Vodafone after a bit of a, you know, a topsy-turvy kind of a day, but now down about 4%. Pick up a Paytm. Paytm has been having some wild swings across the last couple of weeks. So today down 4%, but if you pull up a weekly chart of Paytm, you will see that they were really seeing a lot of excitement after some clearances for investments in Paytm payment services last week. Now down about 4%. Week on week, it's still up 6% despite that hit today. Dixon Tech is another interesting one to see, down 4%. Now remember, there is a cabinet meeting which announce a slew of announcements. You'll see at 3 o'clock in about half an hour from now. And there could be some announcements on semiconductor investments, etc. So that's one to watch. I think Keynes Tech is one, Niraj, if I'm not mistaken, which was buzzing on this as well. So let's pull up a Keynes Tech very quickly before we get to our other views. And that's, yeah, after that little spike, it's also petered off. But we'll wait and see what's happening with some of those companies and in that entire space. All right, let's get some quick views in. With us this afternoon is Hemen Kapadia of KR Choksi Stocks and Securities. Chakri Lokpriya also joining us. Welcome to both of you and great to speak with you as always. Hemen, let's begin with you and just your take on the indices. Some fatigue there. After a fairly decent start to the day, would that be the right way to see it? The key indices definitely seeing fatigue.
Hi, good afternoon, Tamanna. Thank you for having me on the show. It's always a pleasure. 12 trading sessions in a row, Tamanna, and this is the 13th. I mean, the laws of gravity need to catch up sometime. We've had 3 bullish gaps. So somewhere we could see a small cool-off coming in. The VIX has slowly crept up to 14 and above. So one gets the feeling that, yeah, a small period of consolidation, some cool-off, some minor correction, an attempt to cover up one of the bullish gaps. So I guess the Nifty seems tired. Maybe the Bank Nifty is getting ready to do the heavy lifting now. But yeah, absolutely right. Nifty is looking sluggish, and I believe it could remain a bit more sluggish for a couple of days, just to sort of catch its breath from a 13 consecutive day move, Tamanna.
All right, quick view from Chakri as well. Chakri, good afternoon. Always great to have you on. Just an overview on the markets before we get to the stock-specific stories, Chakri. And, you know, we're starting the trading week. We started fairly positively, but even the 25,300 levels looking tough. What are the spaces that you would bet on for the rest of the week? Will autos remain a favorite?
Tamanna, good afternoon. You know, I think a couple of things have happened. One is today's news of, a GDP growth slowdown has kind of woken up certain fears which was dormant, which is, is earnings growth going to pick up or not? So, and you've seen that, metals coming down. Of course, metals have other issues also, Supreme Court after them, etc. But all the cyclical sectors, therefore, you see infra, they're all down. And I think that is a factor. Now, I think the saving grace for the markets and for the outlook will be that, starting in a couple of weeks, whenever there is a US rate cut, RBI will need to follow up with some kind of action. India is not isolated from the rest, from the US. And so I think, so a combination of these two and a lower interest rate down the road, expectation of low interest rate down the road will help sustain the market.
What about your picks for this afternoon, Hemant? What's looking interesting?
Firstly, a buy call on Ramco Cements looks good. Oscillators are supporting the move above the 55-day moving average. The picture is turning positive, not only in the daily, on the weekly charts also, Tamanna. So we're playing for a bounce. It's come off sharply. So a buy on Ramco Cements at around 830, stop loss of 810, target of 870. And the second one, a buy call on SBI cards. Now this stock has disappointed a couple of times, but it peaked in 21, Tamanna, and now the markets have gone haywire, not haywire, but really positive. Stock is just recovering from its lows, so nothing much to lose. Downside appears limited, has made a base. So one can buy SBI cards at around 740, stop loss 720, target of 780. It looks good once again, not only from the short-term point of view, but even the weekly charts are suggesting the onset of an intermediate uptrend. Tamanna.
Okay, actually, I like to come in here for just a moment. Chakri, on SBI cards, just the fact that it may look good on the charts and therefore a good trade, yes. But from an investment perspective, the recent numbers haven't been that great. Their growth has not been good. I remember Bernstein putting out a note that sell while you can, and I think it was on SBI cards. So my question is, if it's showing this intermittent uptick, would you buy into a credit card company like SBI cards currently, or would you use an uptick to maybe get it out of your portfolio if you had it?
I think credit cards at this point have become positional in trades. Simply because, the landscape is changing for across, including SBI, for all the credit card companies. The digital payments, alternate modes of payment, etc. Any number of things have and will not bring down their margins and volumes even more. So I think that is something which is very new, still in the market. And therefore, it's definitely not a long-term investment.
Okay. Now, the other key thing for the day today has to be auto sales. Most months they're mixed bag. In August, they certainly have been mixed bag because M&M SUV clocked in a strong number, but passenger car numbers haven't been that great. Two-wheeler numbers, Bajaj Auto sales, for example, were okay. TVS seemed okay because Bajaj Auto was 16%, TVS was up 13%, and tractor sales for M&M looked slightly muted. So, Puneet, my colleague, is here to break down the numbers. Puneet.
Well, thanks for that. It's been a very interesting month. It was supposed to be a very subdued month with not much news flow. But what's interesting is that for this particular month, we've seen a lot of divergence within segments as well. So for passenger vehicle, Mahindra & Mahindra has grown 16% in sales. This is versus Maruti as well as Tata Motors degrowing, or their sales falling by roughly 3% on a year-on-year basis. That's been one of the key trends to watch out for. When we look at, the two-wheeler makers as well, Bajaj Auto has been one of the biggest gainers in this particular month. They've grown roughly 16% in volumes, and that's led by the strong domestic picture growing by roughly around 30%. The commercial vehicle segment also, which has the three-wheeler business, their exports have grown by 41%, and that's been one of the key things to watch out for. The second key winner in the two-wheeler space has been TVS Motors. The estimates were of 9% growth, and that's come in bang in line with that. So has Hero MotoCorp as well, roughly around 5% growth. Both these players have been doing very well compared to the last year. TVS especially, the electric vehicle segment has also grown to roughly around 24,000 sales in this particular month. Finally, what's also interesting is Ola Electric. Now, Ola doesn't report monthly sales numbers in wholesale, but its Vahan data suggests that sales of roughly about 27,000 is what has come in. This is lower than the 41,000 the previous month, and the market share, tentative market share would be around 31 to 32%, which is lower than the 46% reported at the end of June. So very divergent trends in the PV and the two-wheeler space. Finally, just one little bit on the commercial vehicle space. It's been a very subdued month. Ashok Leyland has fallen by 7%, and Tata Motors as well, reporting a 15% degrowth versus estimates of 10%. So it's fallen much more than what analysts had expected. Tractors, not much to talk about, just 0.1 to 2% growth reported by Mahindra and Mahindra, and flat for Escort. So overall, three key winners will be Mahindra, Bajaj Auto as well as TVS. We should watch out for what Maruti also does. It's subdued today, but it's done some inventory correction, so that's also positive on the long run. But festive season starts in mid-September with Onam in Kerala. That will be one of the key triggers to watch out for. Back to you.
Right, in fact, we spoke to Vijay Nakra of M&M, who's confident that the festive season might bring in or continue to bring in good cheer, and rural recovery could also help in. Listen in.
The festive season should be good. I think as all of us have seen that, while the PV industry has been largely flat, the SUV industry has been growing. And if you look at YTD July, we still have to wait for August numbers to come out of the industry. The industry has had a 15% growth against more or less flattish passenger vehicle numbers. And SUVs, which used to account at one point in time 40%, then became 50%. In F24, it became close to 59.8%. If you look at YTD July, we now are at 65%. So SUVs continue to be, sort of the flavor of the year. And if I was to dial back a little bit into the last couple of months, I think we had elections, we had the budget, we had a strong summer because of which walk-ins were low. But as we start moving into the festive season with a very strong monsoon, and the data of monsoon clearly indicates that if we look at the long-term average, we are at 7% plus. If we look at 90% of the land for Kharif crop has been sown. The data for the food produce reaching the mandis is at 11% higher than last year. Strong crop prices. So we believe that this augurs well for a strong upcoming festive season.
Okay, so that's the focus on auto sales, and really that's been the big story all day, isn't it? Chakri, let me come to you on what we're seeing, and let's just zoom out a little bit. You've had the second consecutive month of actually sales going down, dispatches or cars coming out of the factory gate, vehicles coming out of the factory gate going down. Now, a lot of this has been planned strategically because of the inventory build-up. But are you feeling comforted by the kind of run-up we've seen, for example, in passenger vehicles?
Passenger, if you look at passenger, two-wheelers are doing well. They continue to do well. It's a game, okay, Bajaj and TVS are taking market share and Ola is losing market share. And that's a game which will continue on. But on the other hand, passenger vehicles have been weak, not just in the last 2 months. But if you just look at the trends, there has been just a shift between the overall segment, what you call a four-wheeler. Volumes have been moving away from the sedans to the SUVs. Now, that is an industry trend. So it's not the overall industry volumes have not actually grown that much. And so it looks like that trend will, inventories are building up at the dealerships. They're sitting at about 38 days, 39 days. And that's the sales number that we're seeing, not the end passenger demand. So I think end passenger demand is not made materialized. So it looks like there's likely to be weakness for the next quarter as well, even after taking into account festive, period.
Himen, what about you? Anything that you still see worthy of running up in the auto pack? Would you come into an M&M right now after the bit of a downtick that it's seeing today?
I think I would I would opt for Maruti, Tamanna, because Maruti hasn't done much. One that gives a closer stop loss. A base formation is underway. Not much to lose. It's on the verge of forming a rounding bottom. So Maruti, I believe, has done nothing for 1, 2, 3, 4, 5, almost 5.5 months. So I would prefer a Maruti because once this consolidation correction is over, Tamanna, and we take out 13,000, that's far away. But for a stock like Maruti, it moves fast. So I would opt for a Maruti.
Yeah, I quickly want to see what's happening to the Ola Electric stock because the whole buzz after the IPO has been quite impressive, but in pain today, 3% down. Now, could be a variety of reasons that you've seen that kind of a hit in market share. And in fact, a report by my colleague Tushar will come to him in a bit as well on how FAME 3 might be announced mid-September. So that'll be an interesting story. All right, another company we're focusing on this afternoon is Aarti Drugs. Adish Patel, the CFO and COO, is on with us. The reason we're speaking to them is the 60 crore rupee buyback that they have announced recently. Now, it's a season of buybacks and perhaps helped a bit by, what the finance ministers announced in the budget as well. I'll ask Mr. Patel if that's the reason. Mr. Patel, welcome. Great to speak with you on NDTV Profit. Tell us the rationale of the buyback to begin with.
Yeah, so we always do shareholder payout to the tune of around 25% of profit after tax. So this year, payout was pending. So if we sum up everything, if I include this buyback, it will be around 26% of the last 8 years' profit, all combined. So we thought that this is the right time to do the buyback before 30th September.
What was really the, I think, excitement about your buyback, Mr. Patel, was your price at 900 rupees a share. A huge premium to the current market price. And I recall the afternoon that it was announced, we were live on the show and we saw that sudden spike up. We couldn't quite understand why. So one of the reasons we wanted to speak with you is exactly ask this question. Why 900 rupees a share with the kind of current market price? About what, 60-70% premium?
Yeah, so basically last buyback what we had done was at similar price, 900 rupees. And since that buyback, we have done a lot of investments. All our greenfield projects are now ready to begin in this financial year. So we thought that it wouldn't be nice to do a buyback lesser than that. So that was the main rationale behind giving the premium and going ahead with the similar price of last year of 900 rupees.
Okay. Adish, good afternoon. Niraj here. So is this the last of the buybacks? Because the tax, the budget provisions possibly make buybacks slightly less attractive going ahead?
Yeah, so we don't know. If we see last 6 years, earlier it was in BBT regime, and then they had changed it to buybacks will be taxable at the hands of shareholders. Then they again reverted back to BBT regime, and now again they are going back. So we don't know. Means as of now, it seems like tax inefficient for shareholder payout going forward. We'll wait and watch what government thinks or if any new policies comes out.
Okay. Now, Adish, what about business? I mean, the one problem with doing the buyback at the same price as last year is that it means that the price of the stock hasn't gone up. And that is presumably because business has been flattish. Now, if I look at what's happened in the recent quarter, right? I mean, not too much of growth, the top line, EBITDA, bottom line. What's happening? I thought the API business as well. I mean, the export business saw a notable decline too. What's happening with business?
Yeah, so if you look at the API business in general for last 2 years, last year was the selling prices of API were maximum. It was even higher than those seen during the COVID periods. And then once the crude started declining since last September, the prices started declining, the solvent prices started going down, and every quarter we saw some decline in the prices. And usually the selling prices in API industry follows the input prices. So we saw that there was heavy decline year on year. So especially the selling price rate negative variance is quite high. Even for last quarter, only in export segment, we saw a rate decline of almost around 9 to 10% year on year. And that was mainly because ideally in the March quarter, all the prices were corrected. And after April month, the prices are quite stable. But what happened in the exports is that we have
We can't hear you, Mr. Patil. I think we've lost your voice.
Can you hear me now?
Yeah, there you are. Yes. Please continue.
Yeah. So I was saying that after April month, the prices of API have stabilized. But in exports, because we carry pending orders of almost around 2.5 to 3 months, in June quarter, whatever orders were negotiated in March quarter got realized. So that is why we saw a dip from March versus June.
So this gets rationalized next quarter onwards, or it'll take a couple of quarters?
No. So if you see September quarter, the negative price variation quarter versus quarter won't be there. It will be almost similar. The prices will be same.
Okay. And what about margins? Do you see margins coming back from the September quarter?
Yeah. So there were two reasons why EBITDA margin was hit last time. Most important reason was the sales was down, the demand itself. So demand was also down. The volume saw a little bit, we had a little bit negative hit on volumes as well last quarter. And that was the reason why operating leverage was less and then the EBITDA margin went down. Otherwise, as far as gross contribution is concerned, gross margins are doing well. We are improving year on year. So going forward, we hope that gross margins will improve by 1 or 2% more, and then it will stop at that price. And once our utilization of capacities pick up, then we'll be back to those 14.5 to 15% EBITDA margins.
All right. Thank you so much, Adish Patil, CFO of Aarti Drugs. Thank you so much for speaking with us. And I don't know if we'll again see a buyback next year at 900 rupees once again. But that was the big story as far as Aarti Drugs is concerned. Hemi, do you track this on the charts?
Won't track it very closely, Tamanna. But if I just grab a look at it, it formed a base. It formed a consolidation phase. Looks great above 620, Tamanna. So I'd say it after a long time the stock has turned, and I'm talking about monthly, not even weekly. So I like the stock. Yeah.
Stock, all right. The other stock that everyone in the market seems to like today is Bajaj Finance and Bajaj Finserv. And the reason for that is, and this is after a fairly robust run-up last week, mind you. The reason for that is the Bajaj Housing Finance IPO, which was finally announced over the weekend. Now, what is the impact for existing shareholders? All you need to know about the IPO. We have Harsh joining in with that report.
Well, so Bajaj Housing Finance, it's a 6,560 crore rupee IPO, of which 3,000 crore is a pure offer for sale by Bajaj Finance itself. So they'll get cash worth 3,000 crore in their books on the back of this IPO. The size of Bajaj Housing is around 97,000 crore in terms of AUM. It's one of the largest in terms of housing finance NBFCs in the country, behind just LIC Housing. There's no other housing financier which is this large. And the growth in this company is what really stands out. 72% is the compounded growth that Bajaj Finance has clocked in terms of its AUM over the last 7 years up to FY24. So you've seen very strong growth that Bajaj Finance has seen on a low base and now on a higher base. Currently, it's growing at 30+%. So 31% growth year on year clocked in Q1 of FY25. That's one thing that really stands out for investors. The other thing is with regard to asset quality. For any lender, very, very critical. Your GNPA ratio is at 0.28%. Your net NPA ratio is 0.1%. The lowest in the industry likely, especially with the kind of size that Bajaj Housing has, and therefore a very interesting play even from that perspective. What will really hold the key will be valuations. Bajaj Finance trades at 5.5 times price to book. The current book value per share of Bajaj Housing Finance is 19 rupees. And therefore, if one were to take a correlation of 5 times price to book, you can take a guess as to where the IPO or the IPO price will be. But we'll have to wait and watch for that. likely an expensive IPO is the expectation at least. And in terms of where Bajaj Finance stands, the current book of Bajaj Finance is at 3.5 lakh crore consolidated. Now with this demerger, it will stand at 2.5 lakh crore. So around 30% of Bajaj Finance's current consolidated book will now get listed separately. Maybe some amount of holding company discount may start to creep into the Bajaj Finance stock as a result of that. Wait and watch, because the Bajaj Finance stock moved 7% in trade last week.
7% in trade last week, already running up as well. So is Bajaj Holding. I'm not sure why. Bajaj Holding has also been running up. Maybe it is going to be also benefiting from this entire situation. Volume's also pretty robust. Chakri, are you still bullish on Bajaj Finance after the run-up we've seen?
Bajaj Finance Housing, once it lists, you compare the valuation to LIC Housing, will be an expensive valuation. So it's now a question of whether that valuation will hold. And I don't see a reason why that high valuation should hold, because it's not just LIC Housing. You look at any other housing company, they trade at far lower valuation. Second is, Bajaj Finance itself trades at about 5-6 times book. And then once this company is listed, the book size of Bajaj Finance itself comes down. Then what will the multiple be for Bajaj Finance? My guess is it will actually be lower. So if you add both together, I think the euphoria, given the fact of this IPO, will die down pretty soon on listing.
Okay. Himin, Bajaj Finance even now a buy? After the run-up we've already seen?
Not at one go. 6450, 7450, 7,000 bucks, 1,000 points for a F&O heavyweight. I would say buy in parts, but yeah, I am bullish on Bajaj Finance and Finserv despite what has happened. So I would say spread your purchases, buy on declines. Bajaj Finance is a 5-figure stock in the next 2.5 years. Tamanna.
Next 2.5 years. So you need that kind of a timeline. All right, we'll take a very short break. But before we slip into the break, let's listen in to what the Chief Economic Advisor Anantha Nageswaran said at an event today, saying that slow urban consumption is not really a cause for concern. Listen in.
First of all, the base has gone up, so therefore the growth rates will naturally be lower compared to where it was 3-4 years ago. So I don't think, yes, I think we need to watch for employment generation, income growth and consumption trends, but right now there is no cause for concern per se.
Back with India market close, and it's that time of the show where we get in Agam Vakil to break down the F&O cues for us today. Agam, what's standing out for you?
Well, what's standing out is that potentially we're going to end up with a 13th straight day of gains. With fingers crossed for that, and there's no saying as to what's going to happen tomorrow. But today it does look like we're looking at yet another day of advances coming through on the Nifty at least, and we're looking at another 8% added in open interest, though early days in the series. And the Nifty Bank again, that's where it's been relatively more flattish, a little bit more weakness on a Nifty Bank in comparison to the Nifty, but that's where we are seeing a little bit more traction towards the upside as well. Again, in terms of the options market, remember that earlier on in the day we were talking about a range within 25,000 and 25,200. That range strengthens as a support of sorts, and on the higher end, we're keeping an eye on 25,500 and 25,700, so which will probably provide you with a little bit of a resistance. But we are still in uncharted territory for the Nifty 50, so technically we don't have a resistance, but we may just still see a little bit of that hurdle around 25,500 and thereabout. Well, moving on to stocks again. More gainers, or actually not in the top 5, but in general we do have SBI Life and HCL Tech looking at more longs building in. Hindustan Copper, on the other hand, looking at shorts, and among stocks which are seeing unwinding. Again, a mixed day of trade mostly, but a lot of long unwinding for something like a Vodafone Idea, Balrampur Chini, and Sun TV. In general, a mixed market, but well, the benchmarks hold on to new highs.
Okay, thanks a lot for that, Agam. So, mixed market, benchmarks okay, but caps, small caps may not be as much. Okay, some cabinet decisions, and we'll of course keep on flashing those. The digital agriculture mission has been approved. We're waiting for something on semiconductors to come in, because that could have a telling impact on some of the semiconductor stocks. So that's to be borne in mind as well. So keep that at the back of the mind for sure. Okay. Hemen, some of these companies, and Tamanna was highlighting Keynes Tech earlier, Dixon, which is looking slightly sluggish today in trade, or any of the others which may benefit the electronic EMS sector. Is there anything that stands out for you? If not, give us a sense on the chart of Dixon.
Okay, Dixon is slightly overbought. There is some negative divergence. Niraj succinctly put, we're cooling off a bit. So maybe we come off around $500. But if I look at it positionally, stock is going to go to around 14,800 or 15,000 in the next 4 to 6 months. So what you're seeing currently is, it's had a linear move, a little bit of consolidation, nothing more. I guess if it declines a little bit more, which is a possibility, it would probably quantify as a buy.
Okay, let's put the spotlight back on Gujarat Gas. I think the stock of the day, both Gujarat Gas and GSPL in the green, but Gujarat Gas held on to its gains, up about 12% now as well. So here's what's been happening. Of course, there is a merger scheme, and the company is now aiming to become India's largest integrated player after a merger with GSPC. What does this mean for the company, the valuation picture? Meika joins us for more.
Yes, thank you, Tamanna, for that. Let's just break it down in terms of what the scheme of arrangement actually is. Now, the first part, 3 entities will merge into Gujarat Gas, and this is mainly Gujarat State Petroleum Corporation, which is an unlisted company, Gujarat State Petronet, which is listed, and JSPC Energy Limited, and this will merge into Gujarat Gas. And after that merger, Gujarat Gas will carve out its transmission business to create a separate entity which will be called JSPC Transmission. So in the end, we'll have 2 companies. One is Gujarat Gas, which will carry out city gas distribution, gas trading, exploration and production, renewable businesses and all the related investments, while JSPC Transmission will carry out the transmission and related investments. In terms of swap ratios, where shareholders of GSPC, which is a petroleum corporation, 10 shares of Gujarat Gas will be issued for every 305 shares for JSPC, and for JSPL, we will have 10 shares for every 13 shares held in the company, and for the JSPC Transmission Company, 1 share share will be issued for every 3 shares held in Gujarat Gas. So now a total of 78.66 crores of new equity shares will be issued, but 53.7 crores of these shares will be cancelled out because these companies do hold different stakes in each other. And the timeline of this, well, it's expected to be completed by July and August of 2025. Now, in terms of the valuation picture, we have Gujarat State Petronet. Another company is valued around 26,000 crores. The core business, however, is valued only at 3,500 to 4,000 crores. The rest are investments. And the valuations of this 3,500 crores is low currently, given it's only 5 times the net profit run rate. When we talk about Gujarat State Petroleum Corporation, the valuation comes to 21,000 crores, and the gas trading and E&P valuation comes to 11,400. The implied EV to EBITDA multiple stands at 6.8x, which is lower than the industry averages. And lastly, we have JSPL Transmission, which is the demerged business, and this will be valued at 3,500. And lastly, I just want to end with, in terms of key benefits for Gujarat Gas, well, the combined cash flows will help the company fund its future growth. The merger will also help in pricing power, eliminate some intercompany gas costs, and reduce and avoid double taxation. But the drawback that brokerages have highlighted, that it now exposes the company to riskier and more volatile and regulated businesses.
Okay, thank you for that, Mihika. In fact, we spoke earlier in the day to Prabal Sen of ICICI Securities, who tracks the company very, very closely, and he says that GSPL is a tactical move in the merger, while Gujarat Gas is the one likely to benefit. Listen in.
So I think the concern around GSPL is not so much really a fundamental concern. It's more, I think, that the stock markets had already had an inkling in some way of what was going to happen to the story. And, and therefore probably there was a bit of profit booking of people who had built up positions earlier. If you look at the price on Friday, the stock was already close to 5% of the swap arrangement, derived fair price. So thankfully the stock is again now coming back to the 465 odd levels, which is, implied by the merger ratio. So to that extent, I would say that GSPL is more of a, short-term tactical moves that were basically being done because of the fact that the stock had reacted early. Gujarat Gas very clearly, is something that is likely to benefit from this move, which is what the stock has basically reflected. A bit more than what we estimated, but that's okay. I think we still remain fairly positive on the name as of now.
Okay, so Gujarat Gas, definitely positive sentiment. Chakri, do you see this sustaining? I mean, you've seen it all day today, and you've seen the run-up. Do you see this sustaining now, fundamentally, for the company going forward?
Just because after all this rearrangement, what we're going to see is a good 30-40% earnings upgrade for this new combined entity, and the valuation for this combined entity will therefore accordingly has already moved up, will move up some more. Now, after this, what happens to the new company, Gujarat Gas, which is city distribution, is a highly regulated, uncertain pricing environment, is left to the mercies of the government, therefore will trade at a lower multiple. Second is the trading business is also a very volatile business, therefore has a lower multiple. So the overall company valuation multiples, you will have to value it again on sum of parts. You can't just value it, give the whole company a single multiple. So once you do all this thing, this company is likely to trade at a discount to its current valuation multiples.
Okay, 12% higher for now. Let's just see if there is more. Actually, Hemant, can I very quickly come to you? Maybe we've spoken about this, but the GSPL has a swap in favor of it as well. And it's become even more favorable currently purely from a swap perspective. But the stock has rallied nearly 40% in the last 15 days. Can it do more though?
Well, technically, yes, Niraj, but I wouldn't, like you said, after 40% and a bullish gap today, markets have a tendency to cover up gaps. So, no, I wouldn't bet on going fresh longs over here because, like I said, no known levels, upside possible, but it's more too fast.
Yeah, that's the other point. And keep in mind that stocks don't grow to the trees, or trees don't grow to the sky rather. At some point of time.
I thought money doesn't grow on trees.
Yeah, money doesn't grow on trees and trees don't grow to the sky. So these stocks, 35% in a month, but if you look at it from the bottom, it's a 40% uptick.
This is a different tree. The Indian stock market tree is a different tree. It's not the one where money
That's
doesn't
true.
grow. So that's a different conversation all over. But point taken. Another set of companies, Chakri, if I could get your view on, is all your navratna candidates. I mean, to be fair, okay, sentimentally positive, but all those stocks have also been buzzing all day. NHPC, RVNL, not really, but RITES, SJVN. Some of these counters have been buzzing all through the day. No, I'm not talking about Mazgaon talks. SJVN, RITES were the two of them, and NHPC. Three of them are now been awarded Navratna status. Now, these are companies where in the recent past, the sense is that they've had their time and nothing much really is going to move them. Would you concur with that right now, Chakri?
Tamanna, first off, please don't talk about monies and trees. We don't want them to raise taxes again on us, capital gains taxes. So, now with that aside, now the Navratna status clearly lowers the cost of doing business for a company, gives them the ease. They don't have to keep going back to get government permissions every time they want to raise capital. It brings down on a sustainable basis the cost of capital, which is a very significant advantage. All the other things like ease of doing JVs, etc., raising capital, those are all small, relatively smaller versus permanently the cost of capital comes down, and therefore the margin of the businesses across board will go up, and that is a sustainable advantage. These are growing businesses and will do well.
What about you, Hemen? Anything you like in this space at all on the charts?
All of them look good. All of them have run up too much. I'd wait for a further decline. If I have a 1.5 year outlook, they all look great, but currently, no. You'll have to have patience. Both metals and PSUs are taking a breather.
Okay. I mean, these are, we briefly talked about some of those defense plays which have completely been languishing as well. Would this be a good time to build some positions here, Hemen?
Yes, but I would say don't go the whole hog. You can sort of balance your investment by 1/3 now and more on decline, because thing is they've run up too fast, Tamanna. There's not only a time retracement, not only a price retracement, but a time retracement which is now being built in. So yes, if I were to say take 2 years down the line, they all look hunky-dory, but keeping the quantum and the speed of the move, I think they're on for a longer breather. But even like something like an NBCC, Hudco, all good, everything is fine. I'd wait for a small cool off, or at least compartmentalize, make it a EMI sort of a SIP sort of investment.
Okay, on to an NDTV profit exclusive. Sources tell my colleague Tushar that the FAME 3 for EV subsidy is likely to be rolled out by mid-September, and it has implications. Tushar, tell us more.
Hi Niraj. So essentially, yes, the FAME 3, what sources are indicating that it will come by mid-September. Now that has to be seen from the context of another subsidy scheme that is expiring on September 31st. That is the EMPS 2024. It came into effect after the FAME 2 subsidy scheme, which ran for about 5 years from FY20 to FY24, expired on the 31st of March this year. We have to see this from also from the context of that the FAME 2 had an outlay of 11,500 crore rupees, and it impacted about 13 lakh vehicles in the 5 years that it was in application. We have also come to know that most of the stakeholders, including the government, the Ministry of Heavy Industries, the Finance Ministry, Niti Aayog, and auto industry lobbies are more or less on the same page. There are some bottlenecks in terms of equating the registrations to how the outgo of the subsidy happens. That still needs to be ironed out, so that is still being worked on. So essentially, by the end of this month, when the temporary EV subsidy scheme goes away, FAME 3 might just come into effect. Niraj.
Okay. Tushar, very quickly for the uninitiated and people who missed it, the impact of this, Tushar.
So essentially, if you look at FAME 2, it was the scheme that actually gave a fillip to electric mobility in India. That was around in the last 5 years. We have seen, at least in the electric two-wheeler space, scooter sales have jumped up significantly. It has given to the rise to the likes of Ola Electric. Even the incumbents have come in, like TVS Motor and Bajaj Auto, have made the most of it and are capturing a sizable chunk of the two-wheeler market, so to speak, at about 5 to 7% now. So that 5 to 7% penetration can be attributed to FAME 2. A repeat is very much likely with FAME 3. It has been industry demand.
Okay, an industry demand which is finally coming in. Big story there, especially on a day when auto is in focus, and that's something we'll keep in mind with just about less than 15 minutes for markets to close right now. And we should just take a quick look at what some of those auto companies are doing. Look at the Nifty Auto as well and some of its components and where they're heading. So Hero Motor still doing well in terms of numbers. Everything is number impact today. I would just pull up an Ola Electric and an Atul Auto as well. Their numbers also came in for the month. Ola Electric not as much as what was expected, down about 2%. I saw Atul Auto a short while ago with its numbers 5% circuit intraday. All right, IT is the other sector that we've been talking about. The rally has been going on for a few weeks, but is there more steam left? Rucha is joining us for more.
Thanks, Tamanna. So as you rightly mentioned, Nifty IT is up about 28.5% in the last 3 months. But we'll check out whether more steam is there in Nifty IT for the second half of the year or not. We'll start with Infosys. Now, in terms of price movement, Infosys is up about 34% in 3 months and has hit a 52-week high at about 1959 levels. Today, talking about the valuation, the stock is valued at 30.5 times in terms of FY25 EPS. Now, talking about the second half of the year, the management has guided for a 3 to 4% of FY25 revenue growth, but as compared to FY24, which was at 1.4% levels, this indicates a slight bit of improvement in terms of revenue in constant currency terms. While in terms of margin, if we have a look, the company has guided 20 to 22% of a range, which is higher than around 20.5% range, which we saw in FY24. Another important vertical is the BFSI, that is the banking and financial services vertical. Now, most of the IT companies get majority of its revenue from here. So this is another key thing to watch out for. While in terms of BFSI, the company has been doing a little bit of a soft action over here. The segment was up about 0.3%, largely flat in terms of quarter-on-quarter revenue growth. But the investors should also focus on the margins. Now, in FY25, the wage hike is still pending, which the company has not yet announced. So in the second half of the year, this could have a hit on the margins. Now, coming to TCS, in terms of price volumes, the TCS is up about 20% in 3 months, but this stock is little bit expensive than Infosys, valued at 32 times FY25 EPS. But what is to be watched out for is, number one, communications vertical, which the company clearly mentioned that this will continue to remain weak. Now, in terms of Wipro, now this stock has moved 20% in 3 months and is a little bit of on the cheaper side at 23.3 times FY25 EPS. The current market price is at 533, still below its 52-week high. While investors should watch out for the growth in Europe and the Asia Pacific region, and also particularly Capco business, which largely is about discretionary spending, which has been under pressure since a few months, is what most of the IT companies have been talking about. Lastly, HCL Technologies. Now, this one also hit an 52-week high today. Valuations are at 29 times FY25 earnings. In terms of what investors should focus on over here is the ER&D segment, which is the engineering research and development segment, wherein the company mentioned that they are seeing green shoots over here, which is a little bit on a contrarian position as compared to the other IT companies. Financial services, particularly, as I mentioned, where most of the companies get majority of its revenue. Now, HCL management said that this segment will continue to be soft. So this is another, sort of a weak point which might impact the second half of the year for HCL Technologies. Coming back to you, Tamanna, while Nifty IT has performed very well in the first 3 months, we'll see whether this rally will sustain in the second half or not.
Yeah, absolutely. That is the big question, isn't it?
But I had a question though, actually. Rucha, HCL Tech, in news amongst the most active stocks today, one line, why is that the case? Why is it so active today?
Because HCL Technologies had its investor day last week, right? And most of the brokerages houses say that it is the most fastest growing IT company because it has majority of ER&D segment. But most of the brokerages are bearish on the stock. Why? Because the valuations are very high. While if you talk about FY25 earnings, the stock is valued at 29 times, which is like very much expensive as compared to the revenue growth which the company is giving to the investors.
Yeah, in fact, you should pull up the HCL Tech chart over the last week as well, and that investor day analysis really did boost the stock. Hemen Chakri with us, quick word on the IT pack. Hemen, let me come to you first.
Everything is fine, but second, third week of September, IT will post a temporary technical high.
Sorry, can you elaborate on that, Hemen?
Okay, yeah. Basically, you look at the IT index, you look at Info, you look at TCS. There's a particular elliott wave formation which is forming, which seems to suggest that in the second or third week of September, IT as a sector will form a small peak and take a breather.
Okay, so should you buy right now, and what should you buy?
No, I think I'm not sure if the risk-reward ratio is in your favor of buying fresh, but if you do, today's low is your stop loss.
Okay. Today's low is your stop loss on the index, that is. Individually, any stocks that you like?
I think Persistent has persistently been the strongest IT stock the way I see it. As of now, even HCL Tech doesn't look bad. Tata, but TCS is also, I would probably buy an Emphasis.
An Emphasis, okay. Chakri, any view on the IT story? I mean, we're still waiting for the big Fed announcement this week, and a lot of it is already priced in. Likely to see another bump up there and some real difference to their balance sheets more than anything else.
Indeed, more than anything else, the Fed cut will act as a trigger, as a catalyst for the orders which were like kind of stalled, for them to be released. Now that again, there's another roadblock, which is the US elections, because the companies which are giving out orders, US companies will wait to see who's the president, what is the policy, which means it's January. So, but net, I think the companies still don't depend majorly on the US, who comes to power in the US. So I think IT companies will see an earnings uptick. So TCS, Tata Elxsi, HCL Technologies, all in the manufacturing and financial services exposure space will benefit the most.
Okay. Well, 6 minutes left. Hemen, if I had to ask you for one top closing strategy, what would that be?
A top closing strategy would be a BTST on Indian hotels, Niraj.
Indian hotels. And what is it? Is it a 2% target and 1% stop loss?
Yeah, something of that sort. Small target, small loss.
Something of that sort. Okay, so Hemen's top call is Indian hotels. Chakri, we're entering a busy festive season. Maybe some travel tourism picks up post-monsoon to Indian hotel companies. Not just Indian hotels, but Chalet, some of the others, Lemon Tree, etc. Good sector to stay invested, or do you reckon it's now run its course?
I think it's a great sector. I think there's still a lot more upside left. Lemon Tree, Indian hotels, Chalet, across various price points. You're going into a very busy season, right from conferences to weddings, festivals, and the valuations are still okay. And they've done their little bit of capex which has happened in the past. So I think the inventory levels are still fairly okay. So I think there's more margin expansion that we will see in the coming quarters.
Yeah. Meanwhile, the interesting conversation that, in fact, Niraj, you had with Abhay Agarwal today on the outlook for the markets, and how far to 26,000 is something which is also on top of mind. Are we going to be seeing this sort of range-bound phase for some time, or are you going to see a breakout pretty soon? Where that trigger comes from? Some of those insights in that conversation?
Yeah, and an interesting insight on banks, wherein the credit growth has looked so wobbly that people are saying, hey, let's avoid. In fact, speaking of Abhay, let's just hear out what he had to say about banks and the financial space at large.
The cost of money, cost of deposits is going up. Deposits are more scarce to get. Cost to income ratio is going up across the board. We're seeing because of higher rentals, attrition, salaries. And then you have higher NPAs kicking in. Collection efficiency has down from 98% to 94% for microfinance industry. So there is struggle on all aspects for lenders, including banks, private banks, public sector banks, and NBFCs. 3 bets that we already have there. One is, which has been with us since post-COVID, which is what we call capital market infrastructure players, CDSL, CAMS, Angel One, because if the capital markets have to grow, which they will grow, these companies make a lot of money just, because they're basically tech companies that are benefiting from the macro investment theme. The second part is, which is more recent, about 6 months ago, is the insurance players, because we saw a long sideways correction in health insurance companies, in general insurance companies, and in life insurance companies. And after doing a lot of research, we finally placed our bets. And this is not by recommendation, but our model portfolio is known in the market. So we have ICICI Pru, ICICI Lombard, and Star Health in our portfolio, because we think that this is a space that has been ignored by the investors, and finally the regulator is getting more friendly.
Okay. All right, 4 plants approved under India Semiconductor Mission. I'm seeing that first flash even as we speak. Let's look at what's happening with Kaynes Tech. Let's look at what's happening with Dixon. Anything happening with Tata Investment just a few minutes before close. We'll see how, if we get more details on that, waiting for that, because this was the news that was being looked at very, very closely. All 3 stocks that I mentioned are down right now, but we do know 4 more plants have been approved under India's Semiconductor Mission. This is, as we get more details, something that could be key for markets tomorrow as well. Just a quick word from you, Chakri, on this whole space, and what is the kind of listed exposure that you're looking at and the opportunities there?
Keynes, Dixon's, Avalon, all these companies will benefit, but in the longer term, because semiconductor expansion into this particular area and the PLI schemes kicking in is a long cycle event. So it also has to be matched with the company's capex outlays for this, and therefore that translating into revenue, let's say 2-3 years down the road. So to give it the benefit of doubt, the valuations are high, so we wouldn't really chase them until the specifics are known a little bit.
Okay, so the detail we have is that the Keynes ATMP proposal of 6.3 million chips a day has been approved. It's an investment of 3,307 crores. Land has been acquired at Sanand in Gujarat for it as well. So that is one very, very clear output which has come through on Keynes Tech. No big movement there as of now. But yeah, that's one big story coming in. Thank you so much for joining us today, Chakri and Himen there. But let me go across to Niraj to wrap up the markets for the day.
Yep, just a very quick one. So let's bring up the headlines. And as we said, the headline indices are doing what they are doing, and steady. Mid caps and small caps are actually very steady. And as we close the markets, it's looking okay, not too bad, let's put it that way, with PCR at 1.141, 1.42. A sluggish market day. No point really thinking of this being the template for the next few days, really. Could be a one-off in the session today. We've had a breakneck rally. The 13th straight day now of gains with these headline numbers, so not bad. And just the heat map, if we can, before we wrap up, because this is how the markets are shutting shop. So they've shut shop now. And the heat map, overall, even Stevens, the Bajaj Twins, HCL Tech, and the two-wheeler stocks doing well. Reddy's, Tata Motors, Hindalco, and some others, not so. And the BSE 500, as we wrap up, the top gainers and losers. And you will see the Adani Group stocks had a good day. Motilal Oswal, Nuvama, etc. had a good day. What didn't do well, stocks like Granules, Symphony, Dixon in particular, and Indus and Vodafone too had a slight wobble in the session. With that, it's a wrap on this leg of India Market Close. Thanks so much for tuning in.